Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Friday, March 8th. We're going to take a look at SoFi today. So we have this wedge on the chart on SoFi that sort of comes to a pivotal point here in the near-ish future. And it encompasses the range from 445 to 1170. And it has recently pushed out of the lower bound of this formation, but is trying to get itself back in. Now, part of what has sort of caused the additional chaos, aside from just the normal SoFi chaos, is the news cycle. So we're not going to go through the whole news cycle here, but I mean, from things such as like, just really poor analysts reports $3 a share by Wedbush and remains a sell by KBW, to $750 million debt offering. And then on the flip side, articles coming out about why the market is wrong about the convertible note offering. And then, we get Kathy Wood is buying 1.9 million shares of SoFi. So it's just sort of like, news cycle to the extreme. On top of, just a stock that has some inherent volatility in it and that can sort of, flare up at any time and coming off of the earnings. And so it just is sort of like a interesting sort of mishmash of news cycle pluses and minuses, bulls and bears, people buying, people saying sell, and then, like the debt offering and all of this stuff. So in any case, it's been quite a wild ride, especially the last few weeks. You see, even just in this period here, we stretched from the lower bound of this formation to the upper bound, and that wasn't over that lengthy of a period of time. This was November 21st to December 27th. So a little over a month. And this is a really large formation that we have in here. And so, it's just like being able to do that and then still kind of closing in on it and then pushing out of it recently, this big sell-off based off of that debt offering news. And now it's trying to push itself back in as, maybe the market is sort of siding with the idea of we were wrong on our initial assumption of that, or even in a sort of more light form of that, maybe we overreacted. Like maybe we were right on it and we should punish the stock price a little bit, but we overdid it on this day where we sold it off over 15%, on the back of a day where it fell over 4.5%, right? So, so it's been sort of additionally chaotic in my estimate of things. It'll be interesting to see from a chart perspective if it can get back into here, because seeing this continue to play out would be of interest to me. We'll see how that goes. Now, the nearest in levels that we have besides this now sort of resistance level of potentially getting back into the formation, aside from that, to the upside 791, and then support to the downside 739. Those are the nearest in levels. If it slips that 739, basically $7, but $6.99 and then $6.38. If it does push back into this formation, gets through that 791 and beyond relatively soon, 847. Then there's that gap that I don't know if this is quite filled yet. High of 945. I think the gap fills not until, the gap fills not actually until I think 952. So I think this is, a few pennies short. So there still is potentially a gap to fill up here above 911. So we'll see. We've just had those levels on the chart forever, which is why I didn't slightly shift them, because those are, to my mind, the proper, quote unquote, proper support and resistance levels. But we'll see how they play out. But it's just to denote like, hey, you're sort of in or very near a gap at these purple levels. But so that's the range. 638 to 948 is kind of what I'm watching. If it can continue on its path of volatility and at least move strongly in one direction or the other. Now, on the think or swim side of things, I wouldn't pay too much mind to this conviction candle. This is just you see this down arrow here, you see this up arrow here, this down arrow here. They're commonly wrong. I mean, this one was right, but I don't pay attention to them. It's just a setting that I have currently turned on. So just to say, if you see that, I don't take those seriously. So use them for what you will. But you had a one candle trigger back here, so kind of nothing happening on the TTM squeeze indicator. We even scroll back way back here, we had a trigger and a fire, but that set off a little bit of a roller coaster, if you will, but nothing really tremendous building there. What I would really like to see, if I want to sort of look at a confluence of these two charts, would be for it to get back into this formation, continue to push in here, right? This brings us into like May, June sort of territory, and see it sort of take that time to maybe move within the channel here, and then ultimately kind of pin itself to the mid-range of the channel as it's approaching the nexus point of this formation and start to trigger on the TTM squeeze indicator. That's sort of like my dream scenario. Now, still, we don't know if it's, a dream or a nightmare, because it could go either way. It would just sort of be an indication of, hey, there may be a big move coming. But right now, obviously, mid to lower range of the channel, basically based off of this big sell-off that pushed it out of the formation. But it quickly recovered back into the channel, so maybe there's some potential there. Sort of a stronger top wick today, but nice wick up on the candle yesterday. So, we'll see how it's going to be able to kind of work its way into support within the channel and sort of thwart off potentially being pushed down further. Or, of course, if it does, then, we'll see this bearish momentum on the histogram continue to pick up. It's been pretty flat, the last few swings we see in this range here. We had this big sort of bearish swing down, and then when it got this big kick up, it killed off the bearish momentum, but it drew down so quickly again that it just kind of baselined on the histogram. So in that sort of way, there's plenty of room to move in either direction. And like I said, channel is relatively wide at the moment, open to volatility, if you will. Whether that will happen or not, who knows? But it is quite an interesting scenario at the moment. Obviously, I prefer to kind of err on the chart side of things, just because I just digest things better that way. Things make more sense to me that way. The news cycle and catalysts can sometimes add more confusion than clarity for me. But it has been really interesting to see all of these, like I said, the bullish news and the bearish news, and sort of how it's just kind of coming day after day after day after day after day, or sometimes both things kind of happening at the same day, and you're like, what is going on? And in the meantime, we had this formation that we've been working on for quite a while. Like I said, this was initially put in at almost a year ago, May 15th or so of 2023. So, this is a long time sort of in the making. And so it slipped that recently, but, can it recover and get quickly back into it? Maybe it slipped it back here and quickly got back into it and pushed all the way to the upper bound of the formation, right? So that's kind of the question. But interesting times, another interesting week, and we'll see what happens as we get into, spring and summer here, and what it's gonna do. All right, folks. Can you tell I'm tired and I can't find my words at the moment? I hope that you had a nice trading week and that you enjoy your weekend. And as always, I appreciate you watching, and I will see you in the next video.